The fastest way to live off dividends and earn $2,900 a month. Living off dividends and earning $2,900 per month might seem like a distant dream, but with a clear strategy, disciplined investing, and the right financial decisions, you can turn that dream into reality. In this article, we'll walk through the fastest and most efficient way to reach this goal. Understand dividend investing. Dividend investing involves purchasing stocks, funds, or other assets that regularly pay out a portion of their earnings to shareholders. The goal is to build a portfolio that generates consistent, passive income without selling your investments. Why dividends? Passive income without liquidating assets. Potential for income growth through dividend increases. Can hedge against inflation when combined with growth stocks. 2. Calculate how much you need to invest. To earn $2,900 per month or $34,800 per year through dividends, you first need to determine the required investment. The formula is, investment needed equals annual income divided by dividend yield. Let's calculate for different dividend yield scenarios. Key insight: a higher dividend yield reduces the required investment, but it often comes with increased risk. A balanced portfolio typically targets yields between 4% and 5% for optimal growth and stability. 3. Find high-quality dividend investments. Investing in reliable, dividend-paying assets is crucial. Here are some top options. A. Dividend growth stocks, dividend aristocrats. These companies have increased dividends consistently for decades, demonstrating financial strength and stability. Examples include Johnson & Johnson J&J, Procter & Gamble PG, Coca-Cola KO. Why choose them? They offer lower yields initially but increase payouts over time, helping dividends grow faster than inflation. B. Dividend exchange-traded funds ETFs. ETFs provide diversification across multiple dividend stocks, reducing the impact of individual company risks. Popular options include Vanguard High Dividend Yield ETF VYM, Schwab US Dividend Equity ETF SCHD, iShares Select Dividend ETF DVY. Why choose them? These funds offer solid yields with built-in diversification. C. Real Estate Investment Trusts REITs. REITs invest in income-producing properties and must distribute at least 90% of their taxable income as dividends. Examples include Realty Income O, known for monthly dividends. Stag Industrial Stag focuses on industrial properties. WP Carey WPC diversified across sectors. Why choose them? They often have higher yields but can be sensitive to interest rate changes. D. Business Development Companies BDCs. BDCs lend to or invest in small and mid-sized businesses. They tend to offer high yields but carry more risk. Main Street Capital MAIN. Ares Capital Corporation ARCC. Why choose them? Attractive yields for experienced investors who can handle volatility. 4. Develop a fast-track investment plan. Here's how to reach your $2,900 monthly dividend goal as quickly as possible. Step 1. Maximize savings and investment contributions. Save aggressively. Allocate a significant portion of your income toward dividend investments. Cut expenses. Track spending and reduce non-essential costs. Increase income streams. Consider side hustles, promotions, or high-income skills to accelerate savings. Example plan. Invest $5,000 per month in a portfolio with a 5% yield. In approximately 12 years, without factoring growth or dividend reinvestment, you could reach the $696,000 target. Step 2. Reinvest dividends DRIP. Use a dividend reinvestment plan DRIP to automatically reinvest dividends into more shares. This accelerates growth through compound interest, helping you hit your target faster. Step 3. Leverage tax-advantaged accounts. Roth IRA US tax-free growth and withdrawals if rules are followed. 401k or IRA, tax-deferred growth but with withdrawal restrictions. 5. Optimize your dividend portfolio. Focus on total return, not just yield. Chasing ultra-high yields can lead to investments in companies with unsustainable dividends. Instead, aim for a balance of moderate yield 4–5%, consistent dividend growth, strong fundamentals and low payout ratios. Diversify across sectors. Avoid overexposure to one industry by spreading investments across consumer staples, utilities, healthcare, real estate. Regularly monitor your portfolio. Dividends aren't guaranteed. Track performance and make adjustments as needed to maintain or grow your income stream. 6. Realistic timeline and expectations. Scenario 1. Starting from scratch. Investing $5,000 per month at a 5% average yield with dividends reinvested. You could reach $696,000 in approximately 10 to 12 years. Scenario 2. Starting with a lump sum. Investing $350,000 upfront in a 5% dividend portfolio. With $2,000 monthly contributions, you could hit your goal in approximately 6 to 7 years. 7. Key risks and how to mitigate them. Dividend cuts. Invest in companies with strong fundamentals and manageable payout ratios. Inflation. Choose companies with a history of increasing dividends. Interest rate sensitivity. REITs and BDCs can be impacted by rate changes. Diversify your holdings. Conclusion. Stay consistent and patient. Earning $2,900 per month from dividends is achievable with a disciplined, strategic approach. Focus on 1. Investing in reliable, dividend-paying assets. 2. Reinvesting dividends early to maximize compounding. 3. Staying consistent with contributions and monitoring performance. Dividend investing isn't a get-rich-quick scheme, but with the right plan, it can become a sustainable, passive income stream for life. Would you like help choosing specific stocks or calculating a personalized investment plan? Thank you for watching this video. If you liked the content and benefited from it, do not forget to press the like button and subscribe to the channel to support us and follow more upcoming videos. And share your opinions or inquiries in the comments. We always love hearing from you. See you in the next video, and until then, good luck.